Good morning, everyone. Welcome to the TopstepTV London session. If you're here for the first time, my name is Deeyana Angelo. I've been trading futures for 16 years, almost 17, very soon. And out of those, I've been a prompt trader for about 11 years. I specialize mainly in crude oil and gold, so more on the commodity side. And I trade via my own combination of supply and demand, market profile, and some average ranges that I've kind of modified for intraday trading. So let's get into it. Like today, I was going to talk a little bit more about the time and sales DOM, how you can use it to make maybe better trading decisions, but beware that getting locked into such real-time order flow without a higher time frame reference is not that great for anyone who's more of a beginner. So if you've traded for just 1 year or so, you're still novice, right? You wouldn't be an experienced trader, and that even involves people who have been staring at the markets day in, day out for that entire year. You're still new. You wouldn't learn to perform surgery or something in a year. You know, there's a lot of kind of hand holding that happens until you reach the level of skill required to do very complex skills. So I just wanted to give that disclaimer right off the bat. Also, whatever you see me do in my own trading is not a signal service. Bruno was very kind to put down the risk disclosure. So whatever you do, do follow your own plan. But here, what I can do is share my own experiences with what works for me, what hasn't worked for me, which is probably even more important, and then to see in sort of real time what's happening, how we can take advantage of that, and to kind of keep learning together, right? Because even though I've been in this industry for so long, there is not a single day where when I'm talking to somebody who is also profitable that I don't pick up something from them. Last night I couldn't really sleep, so I actually popped into Dakota's slow markets and was scolded by Dakota that I should probably be asleep. So very kind. But for some reason I just couldn't fall asleep. So I was like, oh, let's see what Dakota and Nick are doing. Yeah, sleep is important, but at the same time, I love watching his analysis. And even he was saying that he was learning new stuff from Rips, right? They're very close. They talk every day. And because Rips has a different way of looking at the markets, Dakota was like, he's seeing something that I'm not seeing. So I'm always very open to learn stuff. And even when people have come to learn from me, there were still things that they were using that were quite useful that I wasn't using. So over time, your trading skills and what you're using, the tools and stuff, they will evolve. And this is what trading is all about. It's a never-ending game of self-improvement, introspective, reviews, and also never-ending learning, right? So to recap yesterday's trading, so I was trying to long crude oil yesterday without looking at the news. So what happened was that Libya, there was like some rumors that Libya had restarted their oil production. Now, one of the big reasons why crude oil shot up the previous week was because both Libya and Iraq have both decided to cut oil production. So obviously there was a lot of worry about the crude oil supply. Naturally, when you think there's not going to be enough supply, the demand for it goes up. And what happens? The prices rise with it, right? Well, as soon as they said, oh yeah, Libya has probably restarted, like we're trying to confirm, but we think it's restarted its oil production, that led to the correction in prices. And yesterday was the very first day in probably over a year that I've seen crude oil actually move 400 ticks a day. That used to be normal. In fact, in my 11 years of trading crude oil, 350 ticks per session was the norm. But in the last sort of year or so, we've only been seeing sort of, 100, 105, very, very slow. So yesterday was actually more typical for crude oil. So if you haven't been watching it that long and you were kind of caught red-handed just going, what the hell's going on? That's the crude oil normal behavior, right? So fingers crossed that we're back. And on the back of that, I did pass that combine, so I managed to make back some of the, minor losses that I had tried to long it. So I basically reviewed what was happening, and as a result, this is the XFA that came from that. It took me 3 days to pass the XFA. I can refer to the stats that I did manage to save before this XFA was activated. So let's recap some of those just for educational purposes. So 3 days to pass. First day was 3 grand, second day about 3.4, and third 2.5, just to get it over the finish line. Overall, my stats here, and this was mainly crude oil. In fact, I don't think I did anything else apart from crude oil. And you will see why I'm a crude oil trader, right? So trade win 51%. Nothing crazy, right? In fact, I would say that this is probably on the higher side for me. And then profit factor is really what is, doing all the heavy lifting here, where profit factor is 2.37, so almost 2.4 R multiples effectively. Average win versus average loss is 2.25, so again, another high number. And I effectively just went to my old style of trading, where I look for a setup on some slightly more higher time frames, and then I will refer to the 4-hour chart for overall directional sentiment, trying not to get too locked into small time frames that can shake you out of perfectly good positions. And then I held my trades for a pretty long time. Like if you see some of my win rate analysis, most of my profitable trades were on the longer side, right? So we had 4 hours and up, 1 to 2 hours, and this was a very quiet day as well. So I held the crude oil trade forever, and then it finally got there after like the 4th hour. It's like, hallelujah, thank you for that. That was basically it. So pretty drama-free on this one. We'll see whether crude oil can continue that for September. Now, today I'm probably not going to be doing crude oil because we have the inventories. If you've been watching TopstepTV for any length of time, you know that I'm not a big fan of inventories, because most of the days it tends to be what I like to refer to as the storm in a teacup. That is just effectively, just I'll go spaz and then nothing. And we've had a couple of weeks where we did get into some sort of a trend, but because I was very careful that crude oil wasn't doing the momentum trades, I kind of stayed out of it. And I was like, hindsight capital, should have been in that. But yeah, it's very difficult to do a breakout trade when you spent sort of 6-7 months looking at crude oil being very range bound for that time of day. But it looks like somebody's kicked it up the bum, and it it started moving. So, maybe as we kind of near the elections and, some of the geopolitical risks and, oil refineries and stuff start to make sense of this year, which has been a very odd year through and through. Maybe we'll see crude oil coming back to those historic mean averages of 250 per NYMEX, maybe even 300 ticks. So today I'm going to be focusing more on gold. I do have a sort of a breakout gold trade happening. So let's get into that before we get into any questions about the dome and the time and sales, which will be the topic today. So if you have any questions about that, so if you're wondering what the hell is time and sale, how the hell do we use it, Dee, how do you get all of these levels here? This is level 2 data, so you will be needing that. It's a separate service that you sign up for. And in fact, when you purchase a new combine, I'm pretty sure I've seen a prompt that jumps up at you going, would you like to buy level 2 data? And then if you click yes, you can just buy it for $39 a month. And then you will have all of these lovely levels and stuff. Now, gold doesn't really have 100 levels up and down. It only has 10. So, it's a little bit different than ES and NQ. So the trade that I'm doing here now is based, again, on some larger time frame developments. So looking at the daily chart here on the left, you will see that we have a bunch of distribution happening here where we couldn't really go higher, right? So this is now all potentially a range. You know, we're kind of guessing here because it's but it's an educated guess, right? But basically, whenever you have something distributing, there's a reasonably good chance that this is going to go into some sort of a liquidation phase. How long that liquidation is going to last, nobody really knows. But, you know, probabilities say that when you get the sideways movement, especially on those larger time frames, it opens up a possibility of about 70% that you're going to get some sort of liquidation phase. Now, this is also part of my general overview and my method, but it was Wyckoff who came up with that. So, you know, I just felt that terminology like distribution, accumulation, markup, liquidation, that I was getting confused myself with that. And, you know, I'm not somebody who's... you know, I'm a pretty educated person with, you know, a couple of degrees under my belt. And, you know, when I was getting confused, I was like, well, some other people might be getting confused as well. So I renamed it to phase 1, phase 3, so accumulation, distribution. And then in between we have phase 2 and phase 4. So in my head, that was just kind of like easier to grasp concepts, especially on the fly. And, you know, it's a very simplistic way of looking at the expected market movement, but we cannot use that for trade locations. So you need something else. And for me, I use the trade locations intraday from the profile levels, so value areas, initial balance, highs, lows, breakouts, or failed auctions, and then also the average session and daily ranges. So while I'm still bullish long-term on gold, I did look at it turning away, and then I really saw there was like just weakness straight off the open, but I still didn't go straight in off the open. I waited for 30 minutes until things kind of shook out, and then I just plowed into a short and waited for the initial balance break. This is not the strongest auction, okay? So the initial balance was this yellow rectangle that you can see on my chart here. And we didn't leave any single prints. In fact, they were pretty much just filled in. But I do have a level of interest lower down, which is somewhere in this demand area, because every time you have some sort of a sell-off and then another move up, that represents the demand area. Now, the quality of the demand area will depend whether that initial move had follow-through or whether it just sort of shot up and then went nowhere, and this one actually made a new all-time high. So I would say that this is a pretty strong movement. Not the best quality demand, but definitely good enough for any kind of targets. And that's exactly what I'm doing here today. So it's a trade that's meant to last, you know, maybe about 90 minutes, possibly 2-3 hours. So I don't know whether I'm going to be taking profits on here unless we kind of get some kind of an obvious reversal, which nothing's happening here. We're also going to refer to Edgeful here because we do have consecutive red bars. So I want to see what the probabilities are of that. And my target is actually at the nice even number of 2,500, where I also have a zone for my average daily range and also average session range. They are literally within a few ticks of each other. And remember, every time I reference the price, it's always a zone. On gold, typically about 35 ticks wide. So it's not like, oh yeah, 500, that's it. No, we're looking at somewhere between maybe 25.15 all the way down to 4900s, you know, just like a 20-30 tick area where you can make your decisions in a better way. So yeah, whether it gets there today, no one knows, right? It's one of those unknowns. So yeah, let's just refer to Edgeful for a second. Again, this is a part of the analysis that I've started doing, but something that I used to do by myself without Edgeful. I had to code things myself, but this is so much easier because there's a clear sort of visual range. Okay, I need to change it to 830 because gold typically opens a little bit earlier for the New York session. And now we're going to look for average consecutive bars. That's what we want to see. And here, 30-minute time frame, maximum red bars is 8. for London. So when do we start London? Here, 1, 2, 3, 4. So for London, we have 8 consecutive bars to wait for. But I also now want to see how it happens during the entire day, because this move actually started during Asia. It started before London. And here you can see the maximum consecutive bars is saying 12, right? 12. So what do we have here? 1, 2, 3, 4, 5, 6, 7, 8. So 9, 11, 12. Typically, it gives you basically the time for this move, assuming that it's going to reach maximum consecutive bars. So I would say after the 12th candle, you can decide to like take profits or just bail completely, or maybe do a reversal. That's also a possibility. But for now, it's still dropping. There is no signs of much buying. In fact, if you look at the time and sales, you will see that the larger players are selling, right? 18 contracts sell, 18 contracts sell, 31 contracts, 31 contracts. So there's still reasonable size buyers that are interested in selling gold. This is also something that happens in September as a part of the portfolio rebalancing that these two institutions do. Now, we saw Linda Rashke yesterday. She's one of the biggest players in ES. And when she starts moving her money, that is going to leave a mark, because it's such big size that they are going to have a significant impact. And effectively, that's what we look for in any of those tools. Whether you're looking for market profile, this, that, dome, time and sales, it's all the same stuff. So to recap yesterday's crude oil trade that I did after the stream was it was literally just a pullback to overnight VWAP. I waited for a reversal and then I held it. It was as simple as that. So once I realized the Libya thing has restarted production, saw a good pullback, I wasn't going to long at that point anymore. So I wanted to see where it's going to turn around. I like to refer to my methodology as wait and see rather than just plow into a position with no evidence. And then once I have the level, I will wait to see what happens there and then make my decision over whether the trade is still valid or not. Okay, let's have a look at what we've got. So good morning, everyone. I can see everybody's wishing people good morning. Very kind. So Rudy, I am actually pretty maxed out on my side. My volume is coming in. I will tell you the exact, volume that I have. It's coming in up to minus 10 decibels. So if I push this even higher, I'm going to start cutting, like compressing and limiting and distorting. We don't want that. So I don't know what's going on with your machine, but over on my end, that's a pretty high. Because I come from the music side. We did a lot of production. I was a sound engineer in my early years as well. That's pretty high, so I really wouldn't want to push the input further than that. Is everybody else having problems with audio? So let me know. And if yes, that might be on the YouTube side. So, I don't know how much I can control that without extra compression and limiting. How many lots? 150K. So I don't trade that much, that size. So I think the biggest lot size that I had in that combine was 6. So, I usually start them very small, right? I would start it off just like 1 or 2 lots to get some sort of a buffer going. And then if that kind of works out, I will then try to maybe size up to 3, but not until I have a bit of a closer buffer to that end of day drawdown. Typically about 3 to 4 contracts is something that I might try towards the very end of the combine, and then 5 and 6 I would try maybe on the last day to kind of get me over that hump. Over the finish line. However, most of the times on prop accounts, these sort of small accounts, because they are small, even though they allow you to trade 15 lots, I never do, right? Because I'm uncomfortable with that. There are some people who are maybe younger than me and they have, a lot to prove. But, at this point, I have all the houses that I want and, cars that I want and all that. And I lead a fairly simplistic life. My probably biggest expense is my dogs. I have 8 of them. And, they go to doggy daycare. That's a pretty expensive thing. It's basically like having a couple of children going to college. per year. But apart from that, I really don't feel the need to go nuts and put that much risk on, especially if the account is like sub 100K. I mean in buffer, not in combines, like in actual money. So yeah, for me, I'm always criticized by some people. Dee, size up. Dee, size up. Like even people in Topstep were trying to get me to size up, and I'm just not. I can't do it. Like I need to have a very decent buffer in order to size up. Otherwise, I start doing stupid things, just like anybody else, right? I'm not completely immune from that. I'm a pretty calm person, and I don't really get too concerned about losing a trade or whatever. But what does bother me is that pain point. So the pain point to me is directly related to the amount of drawdown that you can handle in the account. Now, these accounts, you start off with 4.5K and 150K. That's a small amount, guys. And I'm not going to blow my whole 4.5K on one trade because I'm trying to trade 15 lots. This is a micro, by the way, on gold. I'm trading 5 micros. Why? Because it's the first day of an XFA. I'm not a lunatic to just go, whoa, full board, let's go. I just, at this point in my career, at almost 44 years of age, I just cannot handle that sort of stress. And then, the very high risk there is that you blow out of an XFA in one day. How many of you have done that? Come on, be truthful. How many of you have messed up your XFA on the first day? So don't do it. Just get, I've seen a guy yesterday, Nicholas something. He kept being like, he kept tagging me in his comments, and he's obviously a prop trader that he's been doing prop trading for a while. But then he obviously came to Topstep probably because he wants to remote trade, and he kept moaning about, oh, these accounts, why do we have the DLL? Why do we have an MLL? And I'm like, well, if you've got a 10-year track record, just go to T3 or, First New York, and they would be happy to have you, but you're not going to get 90% of profit split. You're going to get 20, right? Because I actually worked for sort of a London branch there, and that's what you get. You get 20% profit split, but they do per size, right? They're like more size, more size, more size. So it does end up being pretty scalable. But at the end of the day, they're paying you 20%. It's like, what gives, And this is another reason why I went to prop firms. It's like, prop firms suddenly, the remote ones started giving, like the best profit split that I've seen in office was like 60. Most of the time it was between 20 and 50. So obviously the dude was still looking for somebody to give him a ton of cash to trade, but he wants to trade size, and he's not happy that, you only get 4.5K, then you used to have the 3K daily loss limit. So I tried to say to him that, this is more for traders who are entering the industry and they want to learn. So therefore you need a lot of control to be taken away from you in many ways, to save you from yourself. Because let's be honest, we all do stupid shit, right? Let's be completely honest. Excuse my language, but it's just how it is. And you need extra control to prevent you from going into that fight or flight response. No one is completely immune from that. No one. And I mean, on NinjaTrader, I actually have a risk tool where I control the position size, so you can't even move that. I can't move stop losses because I've locked them down, so I have to decide ahead of time whether that stop loss is appropriate or not. Then select the ATM, and then just go in, and that's it. I can take the trade off early, but there's no messing around with stops. And then the second thing I have is time of day. I know that lunchtime is never a great time for me. So I've locked it down. When lunchtime comes, you can carry over a position, but you cannot open a new one, right? So there's like a whole bunch of things that are preventing stupid behaviors. And even when they're not like stupid behaviors, you're still like, you're still like, oh, maybe I'll just try a trade, and maybe you're not looking at the watch. And I'm somebody who looks for very, very large tick numbers, from 70 to 120, 150. Like if we get this one done, this will be 155 tick trade, but it's already 98 ticks in profit. I am somebody who can identify these opportunities. So yeah, people who are kind of complaining that, oh, this is not good enough, and we're doing this and we're doing that. It's there for a reason. It's there to prevent stupid behaviors. And, if it doesn't suit everyone, then go somewhere where, it's going to be more suitable if you want, if you want to be given 100K right off the bat with 20K drawdown. Topstep is probably not going to be the place for you. But for all the rest of us who are not that bothered by the size, and we think that making 500 to $1,000 per day is not a bad way to live, this is what we're after. And that if you want to size up at some point, you can. There is a scalability option, but you need to jump through those first few hurdles before you are given enough trust and enough rope not to hang yourself, ideally. Until then, yes, there will be controls in place, that there will be, steps in place to try and make you pass in the least amount of drama possible. But people still fail. They still, you get up to 3 contracts when you first start trading the XFAs. Up to 3 contracts. You're not supposed to go in with 3 contracts immediately, right? Just try 1. See how that goes. All right. So let's turn to the topic of DOM and tape reading and stuff. Cedric says, do you usually not trade ES and NQ during London sessions? I usually don't trade NQ or ES generally until like power hour. And then I might pop in an ES trade if I see something juicy. Like last night, I was looking at power hour and they were going to shorten the hole effectively, which in hindsight, hindsight capital, it would have worked, but we have to put it into probability. So Andre from Edgeful was saying, well, if it makes the low of the day, that is actually a probability of 19%. And yes, of course it can happen. Of course it can happen because that day then falls into that 19% probability. But the problem is, if you do a trade that has 19% probability and it makes it, you make a ton of money, what you're going to be doing is chasing that same trade. So a breakout for the new low of day in power hour, but 80% of the time of the rest of the times, that's not going to work. So that's how statistics work, right? You take in the trade setup and you see how many times that's happened before. And then you go, okay, so that's a low probability setup. So what I was looking for was a pullback to some sort of level. And in the end, very late, like for the 15 minutes, I had 55.32 because I could see some orders there. So if we cleared those orders and sustained above it, that would have been a short squeeze. If we didn't, if we managed to turn around, that would have been another sell-off, which ended up happening. And but yeah, so you have to weigh the pros and cons. This is why Hogue was like, calling out the stuff that I was saying. So yeah, I would just like to see, especially the house account, be a little bit more mindful about the probabilities of the trade setups that we're taking, in light of all the levels that we have and everything. But it's a process. We're working on it. We're trying to make the team trading work, and it's a challenge. Let's put it that way. But yeah, I don't normally trade ES and NQ during London or otherwise, unless it's power hour. So that ES is my trade for the power hour. Yarden says, good morning. One thing I don't understand is that for every contract filled, there should be a contract on the other side also filled. So what do we see in time and sales? Okay, so there's one thing that people always forget as a component, as an element when they're looking at the auction. Time and speed, velocity of the contracts coming in. So if you have somebody doing the 100 contracts now, and then over the next sort of 30 minutes, you have all the minnows, all of us trading one lot, 2 lots, going in to basically net out the position of 100 lots that was in one go. What's that going to do for price? Which one is going to have a bigger pull? The one that was executed immediately at that side, or the ones that were netted off over the next 30 minutes? So that's what you see on time and sales. Yes, every position needs to have a counterpart, but it's the speed and the velocity of the positions that are coming in that create the movements in the auction. Hopefully that makes more sense now. Okay, so looking at the time and sales here, I've actually filtered this out to show me some of the bigger players, because I'm not that interested in what levels this 8, or if I go 4, 5, 3. I don't care what this 2 lot person is doing, right? The fact that they find 504 interesting, it's like they bear not much relevance for what I'm trying to see. But what I want to see is there was 100 lot that just got erased because I was like messing around. But yeah, if you saw, there were like 100 lots. I want to see where that guy is interested in selling and buying. So rather than looking at the cancerous, all of the orders in, some people like it. I think Jay just keeps it all unfiltered. To me, it makes my eyes bleed. So I need something to, to make it a little bit more. All right, I'm going to take this off because, again, we're talking whatever. So that was 620, not a bad start for my XFA. So let's just kind of focus on the educational part now. And, it's close enough. I said that my average daily and session ranges are around 2503, 2500 was my ultimate target. But right now, after such a big down move, we're in danger of a ping back. And it's coming to 10 o'clock in London when we effectively might see the reversals. So time of day, very important for what I do. I give huge emphasis on the time of day when you're executing trades and what types of trades. So I know that from 10 to 11 my time, trending moves typically fail. If they don't fail, great, we might have another opportunity. But this was also the reason why yesterday I was looking for longs in crude oil, because it has exactly the same pattern. All right, so once I've filtered this out, I can then see where the bigger players are interested in buying or selling. Now, we cannot know whether these are newly initiated positions or old ones, but you can sort of catch what they're happening if you zoom out of time and sales and go to like normal level analysis, normal volume analysis. And you can see even here, we are coming into an area of, so let me just get this a little bit better. Okay, so this is still an area of balance, right? This whole thing all the way down to 2416 where we're looking at the daily chart, right? But this is the visible profile range, and it's not everything that I do, because that's just a small part of it. But you can kind of see the gap. So here's a 4-hour. We have some low volume nodes up here. Now what I like to do, I typically like to take the very top or the very bottom of the LVN, because that's usually where the supplies are, and those will get revisited. So rather than maybe looking for the edge of this, if the low volume node is fairly small, I will look to the other side of it as my level of interest. So basically the edge of the balance, right? And you don't even need volume profile for that, because if you just look at the price chart like Dakota does, you can clearly see this is where we sold off from. It's like, what else do you need? Just a pair of eyes, really, and some experience to know what the hell you're looking for. But outside of that, when we have a very large low volume node, I may look at an edge. If you were listening to Linda Rashke yesterday, even she mentioned the very basics of kind of like profile and stuff. And she mentioned single prints and, keeping aware that there are any single prints that may need some repair. So today I wasn't going to go for a gap fill upside, because we did open with a gap down, because we didn't have any single prints from yesterday. They got filled. So we had a sell-off in London in gold. Then we had a nice buy during COMEX. And it filled in any irregularities in structure that we may have left on the way down, right? So that means gap fills are less likely to need repairing. Therefore, shorts, continuation, with the view that we've turned away from a supply on a larger time frame, and we will be looking for continuation. So when I saw that weakness this morning, I don't typically like to trade, especially not for the first 30 minutes, but sometimes when it's something glaringly obvious that there's no buyer stepping in, which you can't see on time and sales, like there's just like, there was nobody was buying. Everyone was like, sell, 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 sell. So I'm obviously not going to go against that, right? I'm going to go, okay, let's go with that then. And for those sort of purposes, I would probably turn to a very simple, EMAs, VWAP. Are we under it? Are we over it? And how far, right? It doesn't have to be super complex. I don't use EMAs for levels, but I do use them for directional sentiment, right? So if everything is just below the EMA and we have no reversal patterns, that's information that we can use, right? Yes, can you filter the DOM? Well, you can't filter the DOM. You can filter time and sales. The DOM is largely unfilterable because that's just the orders, right? So if you see on GC here, we have 52 at 2506.7. I've been staring at ES a lot. And then not really much of note other than that. Okay, so I mean, you can't. The thing with DOM, you're not supposed to filter it, right? You're supposed to look for sticky outy areas that are visually obvious. Let's actually go to something that's more, that might have a little bit more distinction and bigger levels. Okay, so interesting. NQ has gaps. So we're down to doing the gappy NQ again, are we? Okay, another Twilight Zone week. So here you can see ES 55.21.25 is where we have 114 contracts. That's pretty low. I mean, this is bloody thin for ES. It's ridiculous. What are they doing? It's probably because the big players are not back from their annual leave yet. Yeah, there's no bigger order than 111. But that's what you're looking for. You don't need to filter it because it's going to be price dependent. And the way, like I suppose the way you can filter it in Bookmap, not here, is to just make these little guys less contrast, and then it kind of fades into the background, and you're left with just a big heat map of big orders. So that's actually what I do on Bookmap. I don't have it open now because it kind of messes with the stream. So it's very memory hungry. So when it kind of fills up RAM, my other streaming services start to chop around a bit. So I'm trying to keep it to a minimum while I'm on. But yeah, so with this idea that you only want to look at the larger players, that's great, but sometimes even the smaller players can give you some information. The way I use the DOM, I use it mainly in Power Hour because it can be a little bit unreliable for my particular instruments because they're thinner markets, and then all the orders are quite thin, and then suddenly out of the blue you get like a commercial hedger that just whacks in 200 lots. And then whatever you saw on the DOM just falls through completely. But ES, very speculative product. NQ, very speculative product. And because of that, it's easier to read the tape there. There's a reason why tape reading is usually taught on ES, NQ, and some of those instruments. All right. From the DOM, how do you identify the market is dominated by buyers or sellers? So for me, I don't use a DOM for that. I will be using the simple EMAs, right? So you have a couple of EMAs on the chart, and then if the market is trending above, I also use price action, right? So I'm a mishmash of price action and tape. And I will be using my own objective readings of the TPO profile to determine who's in control, but then also are we breaking demands? Are we breaking supplies? So this is where 4 hour and 30-minute combination really works for me. Every time I try to do analysis and decision making, not just timing on 1 and 2 minutes, it just doesn't end well, right? Because you're too locked in, you can't see the forest for the trees. But for timing tools, like let's say I have VWAP and I want to front run a trade as an idea that, we had a big pullback up to it, and then, you kind of run a feeler trade. I call them feeler trades. And then if that doesn't work, you kind of end up just with like a $300 loss, not like, $3,000. And then if it works out, if you get the reversal pattern from there and the opposite party starts appearing, the first thing I look for is for so the first signal at my level of interest would be a very small time frame to feel out a trade. So it would be waiting for the 1 minute crossover 9 EMA. I do that on Ninja with equi-volume candles because I want to see sort of like either a shakeout candle or then a reversal back into range for a stop run, if that's what we're doing. If no stop run, I will then use just a regular candle, and I'll look for a 1 minute close below the 9 EMA on a 1 minute chart. So that's the first entry. Second entry, I wait for 15 minutes to reverse. So if I do get a reversal for the 15 minutes, I will be entering my second trade, and so on for the third one. And then maybe I might do another aggressive one on the way from the level and away from the level. But that's when I'm trading with like multiple contracts. If I don't have that option and I'm only trading with one lot, I will look for the full 30-minute reversal. So I don't dick around with, I don't mess around. We're trying to keep it PG. So I don't mess around with low time frames. I just look for the bigger time frame reversals, and then I enter the full position. So it's a little bit different, depending on the size you're trading, because you want to limit that downside in prop accounts on that first try, and then kind of look for evidence that you were right. So then you kind of get a better average entry. That's the whole idea behind it. But, doing it unsystematically has never worked for me, right? So I need to I'm one of those people, I'm not OCD in any way, shape, or form in my normal life. In fact, there's like mess everywhere always. But when it comes to trading, I need to have like a decision tree. I can't work without it. It's uncomfortable. So I need to go signal 1. That's what we're doing. Signal 2, that's what we're doing. Signal 3, that's what we're doing. Maybe the fourth one could be a little bit discretionary, but for those first few, I need clear-cut entries. And again, I think where people trip up is not having clearly defined entries. And, we're talking, I've been doing this for 16 years. So, and believe me, in the first few years, I wasn't nearly as systematic. I had a mechanical-based system that looked for very particular areas. But as my trading evolved, I still felt the need that when we go down to those granular levels, to still have some sort of a systematic approach to it. And that's where I find comfort in it. I wouldn't trade without that. And if I try to trade without that, it doesn't end well. It literally just very quickly puts me on the tilt because it's like emotions, right? You suddenly get butterflies in your stomach and you're like, oh, I'm not sure what I'm doing here. But when you know what you're looking for, you make it super clear in your head. That's what I want to see. This is the entry. That's what I'm looking for. That's why I don't like people flip-flopping around levels, right? You get to VWAP and they're like, I'm going long. No, I'm going short. Oh, I'm going long again. It's like, just make up your bloody mind. Do you want to be a seller or do you want to be a buyer at VWAP? Very simple, right? Don't flip and flop, because chances are, you're going to get a price action telling you whether VWAP is working or whether we're running through it. And that's where contextual side of the day types can come in. Are we on a range bound day? Well, then if you're getting involved in at VWAP, it's like the middle of the middle is the worst trade location possible. And you are, in fact, doing a 50-50 flip. But once we get to the extremes of that range, it's why I like neutral days for longs and shorts, and why Dolby's Dorito pattern is actually another way to look at a range bound day, irrespective of initial bounce extensions. You get to the edges of that range and suddenly the probabilities shift to like 70-30, right? Well, how likely is it that we're going to have enough power to break through the highs or lows when we've already traversed like up and down throughout the course of the day and rotated within that range? But if you're going long off VWAP in the middle on a range bound day, it's suicide. It's like literally you're flipping a coin. That's not what we do here. You want to trade with the higher probabilities. In fact, we had a troll over the weekend. Even MP was getting involved, who was claiming that every trade is 50-50. And I'm like, have you like traded at all? So I just said, no, it's because there are probabilities. And then she kind of just attacked me and she said I was lying. So I'm like, okay, cool. You do you. Okay, and then she kept going, and then MP kind of felt the need to get involved, and said, and he actually stood up for me and said, no, she is actually right, come on, let's be nice, and all of that. But then that woman carried on, so it's like obviously just woke up on the wrong side of the bed and decided to argue on Twitter. So one of those. Where is that filter in Bookmap? So the filter, I don't know, because I don't actually use the time and sales in Bookmap. I will be honest. I use Bookmap for just the big bubbles and the obviously the looking at the actual orders coming in. But because of the way that they're represented, all of this stuff will be the bubbles. But you can see them in, like, it's much easier, at least it is for me because I'm very visual, to see a big bubble coming in than like just going all the way down. I think you can adjust the size of bubbles as well. And I've adjusted that when I first started using Bookmap like a million years ago. It was like 3 years ago. And then I just forgot. So I don't know. There's probably a filter for the size of the order somewhere. But I wouldn't know to tell you like off the top of my head where it is. And we're trying to keep it with Topstep here. So I don't want to drag Bookmap into the equation. Okay, you can see it's like literally the same type of information. Also, they're working on their version of Bookmap, so we will have something similar to Bookmap in Topstep pretty soon. Future millionaire. So you have the 30-minute and day chart, actually 4-hour chart. Day chart is for the beginning of the day when I'm just looking at things. So I look at the daily chart every day, but then when I'm actually trying to make decisions, I don't use 4 hours to go, yeah, I'm definitely going to run a short here and then place a stop all the way up here. We don't have time for that in intraday. So, for example, for me, right now, another level of interest would be, or let's pretend that all of this has not happened yet. So we had the sell-off. We had the sell-off from yesterday. And then Asia popped into that, literally like touched it around 3 a.m. when this candle started, sold off, and then London at the beginning was selling off. So what do we have? We have a supply, okay? We have the supply. So the supply is expected to do what? Give us a reversal in price. So there's a trade location. But that's not your entry. It's just a trade location. It's a setup. So we have a direction and a location. How do we enter? Well, this is where lower time frames come in. So sometimes if you want to just keep it simple, you can look for something like a 3-bar reversal or even a 2-bar reversal, bearish engulfing, right? Pretty good pattern. You look for bearish engulfing and then you go in. If you don't see the bearish engulfing move is already on the way, that complicates things because that's where you can maybe use the breakout of the initial balance as an alternative if that's what you're looking for. You're looking for continuations. Like right now, what I was doing here, I was kind of front running that idea. I was front running the fact that we're going to go and break the initial balance. So I was willing to suffer about 12 ticks of drawdown there after the first 30 minutes on my hypo. And the more experience you have, the more your hypos will start coming true, and the more you get an idea of what actually works, what doesn't work for you. And again, what works for me might not work for you, okay? Even within my method, I have people who gravitate towards certain types of setups, like whether it's a momentum or reversal or whatever. Some people are super uncomfortable in momentum trades, others love them. So somebody who loves initial balance breakouts but hates failed auctions. And then I have complete polar opposites where they love failed auctions but hate breakouts. So, I've trained myself to be okay with both. If I were to say what is like a more natural thing for me, I would say that I'm a contrarian. So I will always try and first look for the opposite side of the move, but then if I don't get any evidence of that, I write down things, what I see. We're below 9 EMA, we're below 20 EMA, we're below VWAP, no reversals yet. We have a supply on a 4-hour chart, and then all of that sort of starts to aggregate into a cohesive thought that you can then express as a trade. But it's a process, people try and rush the process, but the truth is, even though this activity is all about just clicking buttons, before you click the buttons, there needs to be a lot of stuff that goes on into your head in order to make the good trading decision. And that's, you know, arguably the toughest part. We're always fighting with ourselves, right? So yeah, I don't look at the day for targets. I look at my average session ranges or opposing areas. Like, for example, one of my main setups is the gap fill down to the value area. So if we had the value area somewhere lower from yesterday, I would be looking for a gap fill. But we don't have that because we opened below value. And I explained at the beginning why I wasn't looking for that, because there was no structure to repair. We actually repaired the drop during COMEX, right? So there was nothing to repair. And then when we hit the supply, if you got the sellers coming in, that was your trade. Now, if I don't have that, my alternative target would then be average session range or average daily range. But then if we have a trending day and we've overshot through all of that, I might be looking for pullbacks and then a scalp if we get them. Sometimes those trades are the toughest. You know, the trending days in hindsight look easy, but unless you were in already at the beginning, or you know, once the initial balance has been broken, it gets very tough to limit risk. So you can maybe then use lower time frame, multiple EMAs. Like if you watch Mohammed, he has 3 of them on the chart, and he just uses them as his guide to see when he's gonna enter, where his stops are gonna be, and when the trades are gonna be invalidated. He also looks at the slope of the bands, right, of the EMAs. So maybe that could be a trending move strategy. For me, like I said, if I'm not in at the break of the initial balance, I will look for an obvious pullback. I don't get that pullback, I'm not trading. It's that simple as that. Can you explain what is the difference between time and sales and the DOM? Yeah, so time and sales is real-time orders coming in. So if I go to get this totally unfiltered and to go down to just one lot, so whoever is executing 1 lot, 2 lots, 1 lots, they will all start coming through. So these are real-time orders from the exchange. This is not like Topstep Sim. This is CME orders, actual orders that have gone through on the exchange. Whereas on the DOM, you have limit orders that are waiting to be filled. So for example, if I wanted to go into a short on gold, like this is a sim, but maybe I can log into my live account and we can try and do this. I'm not going to execute a trade, so I'm going to put it away from the actual level. So maybe, okay, so here's the live account, and now I'm going to go to, let's say I want to do, let's get like an area that's pretty far. So 25.12, maybe on a micro, just go limit sell there. So there it is, right? So that's my order now. So that's how it works. So you see, there's nothing else. There's my order there at 25.12.7 for a limit sell of 1 micro. Okay, so when I remove that, it's also going to be removed. So it's visible through live accounts. Your orders are visible on other people's DOMs. So if anyone doubts whether the house account is live, you can see them. Like literally, you look at the DOM, you can see them executing orders. Jayhawk says, Dee, can you go to CL? Will it keep going lower? We have the inventories today, so I don't know. Yeah, it's like nobody knows. But I can see that it's gone into a pullback. But yeah, we have the inventories, and I absolutely despise trading crude oil on inventories day. These are all my levels from yesterday, so this is not applicable. Let me just clean that up a bit. But what I can tell you is some of the levels that I want to look out for. So we had the previous week's inventories low, inventories high, 74.04 and 75.21. We're below that right now, which might imply that, we might want to go up there into the inventories and then maybe see what the numbers are doing. But that's definitely one area that I will look out for. It's very far away, though. However, if we take into account that yesterday we moved 400 ticks, this is not too far out, right? So it's kind of almost within the day's range. One setup that maybe could be true is that when we come back into this area of supply, closer to the inventories area as well, you might have another short there. And typically, inventories very rarely brings any sort of significant momentum, at least in the first sort of 30 minutes to 45 minutes. And then if we get some sort of an obvious breakout out of the range, we can try and trade that. But I really doubt that I'm going to be trading crude oil today. We'll see. I'm on fast markets later, so we're probably going to be busy with the house account. So yeah, we'll see. Oh, yes, good point, Joe. As Monday was a holiday, do we have inventory today? That's actually a very good point, because they might have moved it to Thursday. You're right, it's not today. So we don't have inventories today. We don't have inventories today. They are tomorrow. I forgot about that, because it wasn't a day off for me, so I always forget US says Labor Day. Let's see. I see gold has found support between 25.02 and 25.06. In order to buy, do you build your position in the zone, i.e. micros when the price? Well, right now I'm trading micros because there's a new XFA, right? But generally what I would try and do, if I'm looking for reversals, I'm more inclined to just look for a 3-bar reversal or at least a 15-minute reversal, at least, right? Because it's a reversal. And if we have a trend day, you're just going to get smacked on the nose trying to pick bottoms. But if there's a consistent buying pressure that holds into some sort of a meaningful time frame, which is a 15 or a 30-minute chart, then I might pop in a trade. But I would not try to go into a mean reversion without some evidence that the sellers are no longer interested in selling it. So you want to see that take profit move, which is what creates the mean reversions. How do you get your ranges? Are you using the tool? Yeah, so I have a whole software development company. So we do sell our indicators on Dublatic indicators. So on my other charts, I have a whole charting thing set up that you've probably seen in the beginning of TopstepTV and up until about sort of a couple of months ago. But obviously, we're trying to focus on Topstep X right now. And, if you want to see those indicators, you can look at my YouTube channel. I have restarted the weekly strategy videos, which I think are more useful for people. So go and watch my video from Sunday. My links are down below in this video. So you can go and check out the videos. And then there's going to be the most recent video in there. That might be quite helpful. And those are all of the tools and indicators that I use. So my 3 flagship ones are Blotic Supply and Demand, Blotic Market Profile, and Blotic DR, which is where my levels come from. So they are dynamically calculated levels. I have a little panel down at the bottom that tells me all individual sessions. So just a whole bunch of data. You know how Linda Rashke was doing all of that on a spreadsheet? Well, we did it for an indicator. So anything that I needed, I put it in a little panel. And I also have a panel for little panel at the bottom of my screen with what sort of open did we have in relation to the value area. Are we opening with a gap or not? That shades those areas darker. So at the literally one glance, I can tell what we've got, where we are, and then I just need to do a few extra kind of cross checks before I finish the analysis. And that's how I'm able to take in a lot of information in a very short space of time. Okay, so let's take one last question, and then we're going to finish it up for today, because I don't want to knacker myself out too much. I have fast markets to get through today. In time and sales, how do you identify the big players who split their contract? Generally, those sorts of players will be there will be pretty much the same size, right? So you will see, for example, yesterday there was a guy who was executing 400 contracts in crude oil, and he did it in 2 lots. So it was like 200, then 200. So usually those players will have a similar size position. It'll be 300, 300, 300. So they're either scaling out of existing positions, or they're executing new ones, or pyramiding in, or whatever the hell they're doing, but generally they will be similar size. So if you see players that have that kind of size, it's going to be the same institution, same person. Joe says, are you not trading copper anymore? No, I disliked it. I just found it not really consistent enough. One day it would move, then the next day it wouldn't move at all. Then the next day, like if I want that, I had crude oil doing that for 9 months, right? So I don't need another instrument that doesn't move consistently. And then it has one day where it goes absolutely bonkers. So it's like, great. So I was just, I've kind of gravitated back to what I know, back to what's been my sort of main sort of bread and butter. So that was crude oil, gold, and DAX, which we're fingers crossed going to get in November. So DAX, if you're trading DAX, I am looking to go into a correction today. So I will be looking for a corrective move upside, because that was just crazy yesterday. I was joking on Twitter. I was like, let's do a poll, semi-apocalypse or bargain buy. And I actually, what was the result of that? Because that was quite funny. I saw that some people were voting on it. Let's have a look. Semi-apocalypse won. Look at that. Okay, interesting. So semi-apocalypse by not a massive amount, but 55%, 56% of people they reckon it's semi-apocalypse time. I'm not quite sure about that. If we look at some larger time frames, yes, we did have a range expansion. ES has gone into a range expansion. What does that mean? Well, it means if you look at it on the daily chart, we have had a range expansion, right? So if I drag, one line there and another line there, if we manage to crawl back up, let's do this, because that's, I suppose this might be a better reference. See, this is why I don't like these sort of things. They're so wishy-washy. But yeah, so I reckon if we manage to hold 55s, so there is some room. Obviously, there's like a lot of room, but this is an equity index. So anytime there's a big sell-off, there will be bargain hunters. So I reckon we're looking at maybe a bit of a recovery. MP yesterday in chat was saying there's a 50 MA as well, 50 moving average daily. So let's have a look at that. I'm just gonna take an indicator, and then I'm gonna finish it up. So take an indicator, and then we're gonna go 50 days, simple. Yeah, so we're kind of popping right underneath that. If we can reclaim 55.48, then we can be in a nice sort of runner situation and recovery up to about 55.90 at the very least, basically looking at halfway into this previous day's candle. So that could be something to look out for. If we break down sub 55, I would be thinking, yes, semi-apocalypse, definitely. All right, guys, thank you for all of your questions. Cedric, I'm going to tackle your question tomorrow because, again, it's a bit loaded. He says, can you please explain the 5-minute 3-bar reversal? How do you execute this trade? We're going to talk about executions tomorrow based on price chart patterns or price patterns, and then we got to dive deeper into that. Thank you for being here with me. Don't forget, today we do have the fast markets. Let me just see if I need to do any plugs, which I probably do, and I've kind of totally forgotten about it. Oh dear, oh dear. So let me just quickly fumble around while I try and log into my email. And then we're going to finish it up. But yeah, you guys are awesome. You always ask incredible questions. And it's a pleasure to see that. You know, a lot of the live streams that we see are loaded with trolls. So it's very refreshing that you guys are so respectful, guys and girls. So I do wish to thank you. I'm very appreciative of that. And of course, the lovely questions. You know, we have Bruno who is moderating, so I do see a few dodgy things every so often. However, Bruno is very quick, and we couldn't do this without Bruno. He's awesome. So yeah, if you had any sort of value out of what I was saying, please give me a like. Obviously, that helps a lot. So what we have is what do we have? Do I need to say this? Probably. So we are doing a casting call. Yes, that is the plug. We're looking for traders who want to come onto TopstepTV to trade with us and to also share their story, right? So everyone is welcome to apply, whether you're at the beginning of your trading journey or you're already funded. So during fast markets, you're going to have a link where Eddie's going to do the same prompt. So if you're interested in that, please click on that link, and that would be awesome. So I think that's pretty much it for today. Don't see anything else. Yeah, so we are done. Okay, let's finish it up. Finally, I have this problem of finishing streams up. I always kind of go off on one. So this is it. I'm saying goodbye. I'll see you guys on Fast Markets later today. Take care.